If you enjoy our podcast, please like and subscribe and consider becoming a digital subscriber to the Albuquerque Journal to help us bring you more content like this. You can find this episode and all of our podcasts on the Albuquerque Journal website, abqjournal.com, as well as YouTube, iTunes, and Spotify. See the show notes for a discount code on a digital subscription. Thank you for supporting the Albuquerque Journal, New Mexico's leading news.
Hey everyone, welcome to the latest edition of the Business Outlook podcast. I'm your host, Matthew Narvaiz. I want to start off by thanking our sponsor, Central New Mexico Community College. On the show today, we have Drew Tulchin, president of the New Mexico Angels. We talk about the Angels 2024 Venture Capital Report and about the economic uncertainty and what that means for venture capital and startups here in New Mexico. Hope you enjoy.
CNM is truly one college with infinite possibilities in tech and data sciences. CNM offers programs where everyone can learn about software, apps, or how to build websites. You can also choose from AI programs and machine learning, the Internet of Things, and so much more. CNM, one college, infinite possibilities, and a proud sponsor of the Albuquerque Journal's Business Outlook.
Drew, thanks for joining the show. I want to start off by, letting you share a bit about yourself, and, maybe sort of give us an understanding of what the New Mexico Angels is as a group.
Yeah. Thanks, Matthew. Appreciate you being here and good work that you do in the Journal and all your other fellow journalists. We know it's not the easiest business model to do journalism these days.
Yeah.
And so from an Angels and people who care about business models in New Mexico, we appreciate you. New Mexico Angels, I've been at the helm as president for 4.5 years. It's actually a 22-year-old organization. We're legally a 501c6, like a chamber of commerce, and we've got a 501c3 nonprofit arm for education. But our purpose is to bring people together to help grow our new and emerging New Mexico businesses.
So the reason we have you here is the Angels released this 2024 Venture Capital Report. Maybe you can let our listeners know a little bit about, how this report came together, who worked on it with the Angels, and, maybe some of the findings.
Yeah, we'd be delighted to. So New Mexico Angels, again, we're a group of people, right?
Yeah.
We're concerned business citizens. We've grown from 30 members 5 years ago to 160 members today. But it's people like you and me, people you've heard in the news, people who are business owners and investors themselves. And that's who came together. And so what we were figuring out is that there's no baseline data. There's no information that all of us in the state can use to understand what's happening in the world of venture capital. And so venture capital, we're talking about private companies that are investing in other companies. It's not for all businesses. In fact, a very small percentage of businesses actually receive venture capital. So I think the perception of venture is larger than the actuality, but it's a very important part of the American economy and also our state's businesses, both our new startups like Silicon Valley, the TV show, and then our emerging or growth companies. And so we didn't have this data of what's happening here in our state, both with local VCs, venture capitalists, and also national ones who are paying attention to our local companies. So we set out and we had a great partnership with an entity called Worcester Polytechnic Institute, or WPI. Some students from the state of Massachusetts. If you're good at that accent, we can do an accent imitation time and people can call in. And we had 4 bright folks who come to Santa Fe to study. And we were the organization that they liaised with for them to do their data research.
Okay. I think one of the sort of the key findings, right, and is just, over $559 million has been invested in, New Mexico-based startups since 2019.
Yeah.
A lot of that money has been invested in recent years. What does this tell us about, the startup ecosystem here in New Mexico, and what are the big lessons from that growth trajectory, especially as of late?
Yeah. So we're really excited by what we see as a trend, what we hope is more than just a flash in the pan. It's been a multi-year trend now. And what that trend tells us is we have more companies that are receiving venture capital that are staying in business. More of those companies are staying in business in New Mexico, and they're getting further and further along. They're getting more rounds. So the venture world, you have a series of waves of capital, right? So those household names like an Airbnb or Lyft or Uber, those folks went through up to Series G, right?
Oh, wow.
A, B, C, D, E, F, G. And that's how many times they raised waves of private capital to enable them to grow. The whole joke, if you know Amazon, if you follow these companies, Amazon, even when it went public, was still in the red, right? It was losing money because it was trying to grow faster. And that's the trade-off. Some of us who have mom and pop or surface companies, we can run a company. We don't have to go to a bank. We don't have to have this growth capital. But if you're really trying to move quickly and do research, for example, if you're in sciences or if you've got an R&D effort, you need to invest that money to then therefore do better. Did that quite answer the question?
No, it did. It did. From looking at the report, it seems like a lot of the activity is happening at the really early stages, pre-seed and seed stages. What are some of the barriers to scaling into these later stage rounds like Series B and beyond?
Yeah.
And maybe you can sort of give like a brief definition of what each of these are: pre-seed, seed, Series B, stuff like that.
Right. So let's start with some fun definitions, right?
Yeah.
There's actually something called FFF. That stands for friends, families, and fools. So that's the first usual round, right?
Yeah.
So that's the people the people in the direct relationship. That's the back of the napkin stereotype.
Yeah.
After that, you have pre-seed because it's so early, then seed, and now Silicon Valley has even got seed plus, and then you get A, B, C, et cetera.
Yeah.
Right? And that's, again, only in the venture world. You can also, in addition to that, go out and get debt. The state of New Mexico, NMEDD, is a great partner. And there's capital, what they call non-dilutive capital or grants. They're rare, but they are available for the right type of companies that are creating jobs and doing things here. So you've got a wave or different variety of ways that this money can come into these companies, right? And stereotypically, companies... it's hard. Startup world is hard. Statistically, if a company can make it to 5 years, they become an old timer. It's like dog years, right?
Yeah.
And so just having these companies stick around and be able to make progress and get closer to market and closer to having a product to sell is important. And so what the report showed is that all of us, the state of New Mexico, is getting better and better, more robust at these early stages, pre-seed, seed. Series A starts to get harder in Series B, but we have good news. I think you all even helped share the good news about Crossbow, which was one of the companies. They just did a Series B, $105 million. And they're homegrown talent right here in New Mexico and using our great resources to be able to launch their rockets. So stuff is happening. And if you could imagine, if that one's $105 million, it doesn't take too many of these that are growing to hit some of these numbers, which sound very large, but are really just a reflection of healthy growth.
I'm trying to get my head around what this means here, but maybe you can help me and also the listeners understand what this is. So, in the report, it says that New Mexico has seen a 90% compound annual growth rate in capital investment in startups over the last 4 years. What is the compound annual growth rate, and what do you think is driving this type of growth, and is it sustainable?
Yeah, great question. So first of all, a little terminology. I know you and I were laughing about that. So it's been a little while since I've been in school, right?
Yeah.
So those of us who want to learn terminology, there's Investopedia, right? Just like Encyclopedia, just like the other PDS. Great resource, great website. People should check it out. The report you're talking about is at nmangels.com. You can click on our website. You can download it, get access to it. We chose to provide a lot of data. I know that's overwhelming, but we really wanted people to have the whole picture. So this 90% CAGR or CAGR, as people say. So it's actually a really strong financial term. Basically, it just means that it keeps adding on each year, right? So if you have 6% on $1, that's 6 cents. At the end of the year, you have $1.06. So it's compounding. So then you have 6, then 12, and then 24. So it starts to get logarithmic and it starts to increase. And that means that the things keep going. Is that sustainable? I think the honest answer is we don't know, particularly in our choppy waters of our current economy. So we'll have to see. But there is capital, there is dry powder amongst our venture groups. So we have the money available. What we in New Mexico need to do is keep telling the story, thanks to our journalists, keep sharing on social media and with other viral ways of communicating so the story can get out, and then keep supporting our entrepreneurs who have good ideas from our national labs and our universities and are building companies to give them the talent needed to bring the people together to really make something come to be.
I want to ask, so, yes, the economy is sort of in a weird spot right now, right? And I know the report itself is sort of focused on last year and, the previous 5 years, but I should ask, like, right now, what does the startup ecosystem, the venture capital ecosystem look like, in New Mexico over the past, 3 to 4 months?
Yeah. So you talk about the last couple of years in this kind of hockey stick, right? Things increasing. And remember that we aren't too far out of COVID, right? So even in COVID, New Mexico had a positive story. And you don't want to say that COVID was good for anything, but one of the things that it did enable is it enabled a lot more virtual relationships and a lot more distance. A lot of us in New Mexico, it's an eye-to-eye state. It's a handshake state. You got to be in person. Yeah. And so we were able to build relationships and linkages to Silicon Valley, to the East Coast, nationally, even to the intermountain areas. And so we were attracting attention and getting visits both virtually and then in person during COVID that we hadn't had before. So now fast forward to today. The choppy waters, luckily, the stock market is pretty much stable. I mean, we had a dip a couple months ago. But what that means is that there's not less money. What's happening is that people are unsure, and they're unsure in the public markets. So a startup actually has a great opportunity. When things are unsure, some people rush to gold, right? If those of you who are investors might look at what crypto or what gold's doing these days. But the other side are like, the stock market's not doing me any favors. It's unstable. A startup's risky, also unstable. Let me look at how I can help my local economy because I can see it, touch it, feel it, understand it, and have it be something of value.
Mm-hmm. Well, let's go back to the report. So, it highlights that biosciences account for over 40% of invested capital. Why has this sector emerged as such a strong leader here in the state? And, are there risks in that level of concentration?
Let's see here. So why first? We're really fortunate between our universities and our labs that we have a lot of innovation.
Yeah.
And one of the biggest growth areas in the American economy was an aging population and health concerns, right? And so that's an area of need. That's also an area of want. That's an area where there is capital.
Yeah.
The other factor around biotechnologies, and this is a wide range of stuff, everything from pharma to a device to a health innovation. The reasons around those is that some of them take quite a long time before what's called pre-revenue. So you make a widget, you make a doodad, you can usually sell that. You make an app, you can get money for that pretty quickly. One of the benefits of that type of company is that it can be kind of a quick start and can get some capital can really move it quickly. Our biosciences often take a number of years and quite a lot of capital in a venture environment before there's a return.
Yeah.
So that's part of the why. Back to you.
Well, I guess the follow-up question for you was, is there, risk in that level of concentration? So I know there are other areas too, correct? But, being that 40% of that biosciences account for 40% of invested capital. I mean, is there a risk in all, most of the money, nearly half, going towards that area?
I understand why that is a concern and where that question comes from. I don't feel that that's what happens in our venture world, right? Yeah. So let's create an awful scenario. Health goes out of favor, or there's a catastrophe, or a bunch of scandals.
Yeah.
And so that sector becomes less hot, right? We already have AI, which everyone is talking about.
Yeah.
And nationally, AI is really the thing in venture. I think it's a little overheated. But New Mexico, the other sectors that were just behind the biosciences were space, tech, which we included to mean software and hardware, and then health tech, right? So various things that were a little more tangible in the health sector. So you have other sectors which are also of note in New Mexico. One of the factors that led to that percentage was this kind of Series A, B, C we talked about earlier, and the fact that some of these companies were doing well, so they got a check, then they got another check, and then they got more attention. So I see it as a positive, as an indicator of success, rather than, we need to worry about diversifying. We do want these companies to do well, and we want them to proceed towards making money for investors, what we call an exit, right? An exit doesn't mean a company leaves or ceases to be. It means the investor is able to realize a return.
Yeah. Well, let's talk about exits. So, the report also notes a lack of those. So maybe you could define for us, what an exit is, and what would need to change to improve, on that.
Yeah. Yeah. So we did a webinar last week. We had 100 people show up, and we got some questions we weren't expecting, to be honest, right? And someone said, "Are exits good?" And what they were coming from is they've also read that some of our companies, they leave the state because they get seduced away by opportunities. They go to larger urban areas with more marketplace, or the investors require it. That's a little older. That used to happen. It's a little less likely now. The old adage was that investors wanted to be within 100 miles of their investment. A little less so now. But what happens is that I've totally lost my train of thought.
You're good.
So what happens is that we want to make sure that the investor can get money out, because if they do that, they're more likely to write another check.
Yeah.
If a venture capitalist disperses all their money, has a full portfolio, and then is managing the portfolio but doesn't have an exit, they don't have any dry powder. They can't do more. They're stuck. And so what we want to do is we want to give the investors an exit so that there's a recapitalization. But we still want those companies to continue, and we want them to keep growing and have even more capital, keep doing what they're doing.
So the report did note, just one IPO and 4 acquisitions, in the previous 5 years. I mean, how does in terms of exits, how does that compare to maybe some neighboring states we have?
Yeah, good question. So we New Mexico, as many of us know, is small.
Yes,
We're large, 6th in land volume, but not in population, and so we didn't really think it was a very apples to apples to look at Texas, right? Arizona, a little closer, larger population, same land mass, and also their venture universe is a little bit similar to ours, right? Because the universities and so forth. So comparing us to Colorado, Arizona, or say Nebraska is a better comp than it is to look at California and Texas, right? So we were looking at Michigan in particular because they had done a very robust study and they had a lot of information. So it made it easy for us to go understand what they were doing. And we would probably describe that the Michigan market is about 2 steps ahead of where we are right now in venture in New Mexico in terms of homegrown talent, local capital, and national attention being placed to these things. New Mexico, what we consider to keep seeing is that there are national organizations and national people that are making linkages. And those linkages are going to be very important to build the teams and the talent of our companies, to be able to build the relationships with strategic corporates and others, and to be able to find those sources of national venture and then private equity and others so that we can get these exits. And the more robust we build those highways, those channels, those linkages, the better I think our state will be, and healthier for the economy in a lot of ways, not just for an exit for a specific company.
And I'm not sure if the angels or, maybe other investors out there are thinking about this, but, how big of a role do you guys expect, quantum technology to play in, the further development of this type of ecosystem here in New Mexico?
Yeah. So we at New Mexico Angels find information, newmexicoangels.com. You can also see events and things coming up. And then our partner, New Mexico Vintage Fund, which a lot of our angel members are investors in, separate legal entity, but the most active venture entity in the state. We're very supportive of quantum. For those following the news, there's a huge state initiative, which we're very thankful for. Sandia, UNM, a lot of other players are coming together. Quantum is early, right? So from a scientific innovation standpoint, there's lots of space. For a business model perspective of what you can actually invest into, it's super, super young. And so young stuff can be exciting, but it's also difficult.
Yeah.
And it also means that the space isn't very well mapped out, right? AI arguably is a little bit further ahead because it's very specific in some of the business use cases. And so you see a lot of activity both in New Mexico and elsewhere in AI. Quantum, we want to be supportive of. We haven't had as many businesses that have approached us at an angel level and early, that pre-seed FFF round, right? Some of them either are institutional, they're at large corporations, they're at big institutions like a university, and they have some starter capital. Our state, New Mexico EDD, the Economic Development Department, has a quantum grant. And that's a great place to start, and that's what we want to support. And so we're more about supporting the ideas and the people around quantum than we are yet seeing the business models.
Yeah, and I think, the Economic Development Department actually just awarded the first grant as part of that quantum grant program. So that was, some new news that came out about a month ago. I want to move over to the State Investment Council. So they've committed over $774 million to venture funds. But the report notes it's difficult to track how much of that actually ends up in New Mexico startups. What kind of accountability or transparency do you think should be added, for groups like the Angels to track stuff like this?
Yeah. So New Mexico State Investment Council, separate legal entity, right?
Yeah.
It's a state entity. And this is our, meaning all of us citizens, oil and gas royalties, right?
Mm-hmm.
So this is a fund that's fueling our government. And those folks over there have a very difficult task. That task is to invest our state's money in a way that can earn a return. And they've done it so well that that's why they're so large right now, right? Reaching national and even international attention. And they have made not a bold, but a very wise choice to have a segmented portfolio. For those of us in finance, portfolio theory, right? And they have allocated money towards alternative investments, which venture capital falls in. And they have decided that they're going to take some of our money and invest it to earn a return. So that's their role, right? It just so happens that opportunity creates an actual activity for us here in the state, that those venture capital firms can actually invest in companies in our state. That's the only asset class that they're working on that has that applicability, right?
Yep.
So first and foremost, they need to earn a return. They're choosing national VCs with strong reputations that are going to earn money for you and me. That's number one. That we can also get this secondary opportunity that those entities, those venture firms, will look at companies in New Mexico or the other innovation, have them have companies that want to come to our state. We're so small, maybe we don't have enough companies, but maybe one of their investees is going to invest in, I'm going to make it up here, a solar innovation or water, and that company should come to New Mexico. So because there's that relationship between the SIC as an LP, or what's called a limited partner or an investee, into the venture capital firm, we now have a relationship where we wouldn't otherwise. And so that's powerful. How much control or authority should the SIC exert over these people? That's mixed, right? Some people say that there should be the obligatory handshake. I'm writing a check into you. You need to write a check into us. Is that going to be good business? Well, it could be. So I respect their position of what they're trying to do for us, and it's hard to have your cake and eat it too. I think they're trying and they're doing a good job for us, and we're only seeing more and more results with the decisions they're making and the VCs that we're building relationships with.
I think this is a natural segue into, sort of defining, what a New Mexico-based business is. So the report recommends, expanding that definition. What does that mean in practice, and how can that help attract more companies and capital here to the state?
Yeah. So I think all of us would love to see more be more in a positive way here in New Mexico, while still maintaining the things that we all like that are special: our air, our mountains, our views. So how do we have successful companies that benefit from these national relationships while it's still being a New Mexico company? There are a couple of definitions in our state requirements for those companies that are looking at, say, JTIP, which is the Job Training Investment Program. And those definitions, in my personal opinion, are a little restrictive to what we're seeing in today's marketplace in a post-COVID world. And what I mean by that is some of our companies are better because they have virtual relationships. They have a C-suite, they're executives that are in other places by design. And so how do we collectively say it's a New Mexico company, know that they're paying tax here, know that they're hiring people here, but that allowing them to build relationships where their customers are, where they can make stuff very well, where they can have talent. So that's the tension. And we would like to work with our state colleagues to help move some of those definitions into the reality of the marketplace in 2025 and beyond.
Last question for you is, when can we expect to see another one of these reports?
Yeah, right. I just put it out and you want to see another? Matthew, give me a break. We're really lucky. Our students at the WPI, the Worcester Polytechnic Institute, they're coming back to Santa Fe in the fall, and they've agreed to work with us again. So we're going to be working on the next year's report. In addition, we've been reaching out to other partners, our friends at New Mexico Finance Authority and MEDD. If you, our listeners, are part of a data gathering effort, if you're part of investing and would like to be part of this, we want to give an open hand. People can reach us at info at nmangels.com. We've been in touch with a great group called Bieber, right? The Business Research Bureau, and they're very supportive of how we make sure we have good methodologies. So everyone we've spoken to understands that data is powerful and data is information, and the more we have, the better we can be. In addition, we're going to add qualitative in addition to the quantitative and have stories and have case studies for our companies that are going through this journey so that we can better explain what it is that's happening in the marketplace and how we might be able to have more of it.
Sounds robust. Drew, thanks for coming on the show. I really appreciate it.
Thank you. Delighted to be here. Come check us out at newmexicoangels.com and keep doing good things for helping other businesses.